Hello friends, this is Smita here and our today's topic is GST part 2. We have already created one video on introduction to GST which is in part 1. This is the second part of GST introduction. In earlier part we seen what is GST, what are the components of GST. Then we have seen the different GST benefits to the trader, that is businessman, benefits to the customers, and benefits to the government. Then we see GST registration, how to register for GST, who is eligible for GST registration, what are the GST number elements. These all these things we have seen. The next part is time of supply. We will discuss about time of supply. What is time of supply for goods? What is time of supply for services? That we will discuss in this topic. So, time of supply. In order to calculate and discharge tax liability, it is very important to know when the tax liability arises. See, we need to charge GST. So, when to charge this GST is known as the time of supply. In order to calculate and discharge the tax liability, it is important to know when the tax liability arises. That is, the date on which the tax can be levied is known as the time of supply. On which date we charge tax is known as the time of supply. So GST law has provided separate provisions to determine the time of supply for goods and for the services. If the person is the trader or manufacturer, he has to follow the GST law for time of supply for goods, and the person who is providing the services can follow the time of supply for services GST laws. So one by one we will see. Time of supply for GST. The time of supply for goods shall be earlier of the following. There are two types of dates. Whichever comes earlier will be considered as the time of supply for goods. Which are those dates? When the supplier receives the payment. If the money received in advance, means the money received by the supplier, is the date. And the second date is the date of issue of invoice by the supplier. So whichever date is earlier, that date is considered as the time of supply for the goods. Again, for the services, time of supply for the services. The time of supply for goods shall be earlier of the following. Sorry, here it has to be services. The date on which the invoice is issued by the supplier, or the date of receipt of the payment if advance is received, that date. And the third date, the date on which the recipient shows the receipt of services in his books of account. There are three criteria, there are three dates. Whichever dates comes earlier is known as a time of supply for services. Which is the first date? The date on which the invoice is issued by the supplier, so date of invoice. The date on which the receipt of goods payments, so advance received, that date is available. And the date on which the recipient shows the services received in his books of account. Whichever the date is earlier, it is known as the time of supply for services. The next part is payment of GST. The amount payable to the government of GST is always like this. I will give one example. Goods purchased 10,000 rupees, and GST, we paid GST, that is input GST at the rate of 18%, charge on this 10,000 will be 10,000 multiplied by 18%. It is 1,800. This is the purchase part. So this is purchase part. Now, next is sales part. Goods sold for 15,000. The same goods we sold for 15,000 and output GST, that is sales GST charge to our customer, output GST at the rate of again the same percent, because it is one nation, one tax. So percent of GST on the same product will be same all over India. So on 15,000 we will calculate 18,000, 15,000 into 18%. The output GST is 18%, will be 2,700. So output GST is 2,700. Input GST is 1,800. This means we will get ITC of rupees 1,800 and GST payable by us to government will be 2,700, that is output GST minus ITC, input GST is 1,900. This will be the amount to be paid to the government. Well, now how to make this GST payment, when to pay this GST, if this GST payment is not paid to the government on time, what will be the consequences or fines, that we will discuss now. So payment of GST. GST payment can be made online or offline. So this 900 can be paid to the government either online or offline. There are different types of options available. We can pay through credit card, debit card. We can have the e-ledger also. Electronic ledgers are the statement available which we can be used for paying the GST amount. So GST payment can be made online or offline. It is compulsory to submit challan on GST portal for both online and offline payments. So whether paying online or offline, it is compulsory, it is mandatory to submit the challan. Where to submit? Go to GST portal and submit the challan. If the tax liability is more than 10,000, it is mandatory to pay tax online. So suppose our tax liability is 900, then we can pay offline also. But if the total tax liability payable to the government is crossed to 10,000, then in that case it is compulsory to pay the tax online. Payment of GST by the normal taxpayer is to be done on monthly basis, and that too by 20th of the succeeding month. So normal taxpayer means regular GST person, regular GST payer. So payment of GST by this regular taxpayer is to be done on monthly basis. And when to pay this GST to government? Next month's 20th is the date on which date the amount should be paid. It can be paid before that 20 will do, but after 20th will attract the fine. So 20th of the succeeding month is the date for paying the GST amount. And for the composition scheme, composite taxpayers, they can pay GST on quarterly basis by 18th of the succeeding quarter. So for the first quarter, that is the start, we our financial year starts from April. So April, May, June is the first quarter. So for this quarter, the GST payment will be paid on 18th of July. So this scheme is available for composite dealers. If only tax return is filed without tax payment, it is not considered as valid return. So what is the difference between tax return and tax payment? See, the amount payable is 900. This is tax payment. And tax return means the details of goods purchased and details of the goods sold is known as a tax file. Tax return. Return includes what? Sales invoices, all the sales invoices and all the purchase invoices. So it is a list of all the invoices of all outward supplies and inward supplies. So if only tax return is filed, if you only upload all the invoices of sales and purchases and do not pay the tax amount, then it is not considered as valid return and it can attract the fine. So always file return as well as pay tax on time. Now, what is GST return? Who can file the GST return? GST return is filed by a supplier when aggregate turnover crosses the threshold limit. So this threshold limit gets amended every now and then, time to time. So for exact threshold limit, we need to Google it. So whenever the supplier crosses his turnover to the aggregate threshold limit, it is compulsory to file GST return. It is compulsory for the suppliers who sells interstate supplies, means who sells to different states. Such suppliers are required to file GST returns. TDS deductors are also required to file GST returns. Along with this, suppliers supplying goods through e-commerce operators and the e-commerce operators itself are eligible or required to file GST returns. Now here are the dates for GST return filing. GST forms, which form to be used for filing GST returns is given in this table. The first form is GSTR1. Here all the details of the outward supplies are uploaded in this form, and this form should be uploaded to the GST portal on 10th of the next month. So every 10th we have to upload the GSTR1 providing the details of outward supplies of the previous months. Next, GSTR2. This is the form where we can provide details of all the inward supplies, that is purchases. And this form needs to be submitted on 15th of the next month. Next is GSTR3. This is monthly return, means it should give the details of outward as well as inward supplies, and this form needs to be uploaded on 20th of the next month. Next is GSTR4. This is for the composite dealers who file quarterly returns, and this form needs to be uploaded 18th of the next months after the quarter. GSTR9 form is used for annual return and it should be filed on 31st December of the next financial year. So these are the different forms and the due dates for filing GST returns. Next, consequences of non-compliance of GST. Suppose GST is the tax return is filed or tax payment is paid, either one of the things is done and other one not yet completed. In that case, what are the consequences of non-compliance of GST? First one is failure to furnish the return. Suppose return is not uploaded, return in the sense all the invoices, sales bill, purchase bill, all the GSTR forms are not uploaded to the GST portal on time, then late fee will be charged for late or failure to furnish such details. So the government charges fine for such things. And what will be the fine? Fine will be 100 rupees per day, subject to maximum of 5,000 for quarterly, that is composite dealers, and for monthly or regular dealers. So if the GST returns are not filed on time, then rupees 100 per day will be charged till that GST form gets uploaded. If the offender fails to furnish annual return, this is for the monthly or quarterly return. If the GSTR 9, which is annual return form, is not filed on time, late fee and interest will be charged at the rate of 100 per day for every day, subject to maximum of 0.25% of aggregate turnover. Again, here the late fee is charged 100 rupees per day, or it can be 0.25% of aggregate turnover of last year's turnover. If the regular dealer do not furnish return for 6 consecutive tax periods, in that case his registration get cancelled. GST registration also get cancelled if the 6 returns are not filed, consecutive tax periods is not filed. In that case his registration get cancelled. And the scheme for composition dealer is, if the composite dealer do not furnish the return for 3 consecutive tax period, his registration gets cancelled. So it is always recommended to file GST returns on time, on particular due date. Before the due date will do, but try to make it on the due date. Now, consequences of non-compliance of GST for non-payment of taxes. Fine for non-payment of taxes. An offender not paying the tax, that is in our example 900 rupees, the offender not paying the tax or making short payment has to pay a penalty of 10% of the tax amount due, whichever is outstanding. On that amount, 10% has to be paid as a fine, subject to maximum minimum of 1,000 rupees, 10,000 rupees. So this is the penalty, and along with this penalty, fine with imprisonment, jail up to 5 years, depending on the amount of tax evasion, with slab ranging from 25 lakhs to 500 lakhs. So there are the fine is also imposed, along with the imprisonment is also there. So better to pay taxes on time and file the returns as per the due dates, the schedule of the giver, which is amended from time to time by the GST Council. The next part is input tax credit. In our example, we purchased goods of 10,000 and paid input GST 1,800. We sold goods of 15,000 and collected GST, that is output GST, is 2,700. So out of this output GST, we need to deduct GST which is paid while purchasing. This input GST is known as the ITC. We get ITC of the amount which we paid while purchasing the GST, and after deducting that ITC, the amount which remains needs to be paid to the government. So ITC, we will discuss about this amount in this part. So input tax credit, ITC stands for input tax credit. Full form of ITC is input tax credit. ITC means at the time of paying tax on output, that is sales, the taxpayer can reduce the tax to the extent tax paid on input. The taxpayer can reduce the amount of tax while paid while purchases. ITC means claiming the GST paid on purchases, either goods or services, which are used for furtherance of the business. Means those goods should be used for the business only. So in that case, we can get ITC on those products. Eligibility for taking ITC. Who can go for ITC? Who can take ITC? Person should be registered person to take ITC. First of all, suppose we need to take 800 as ITC. It is compulsory for us to get registered with GST portal, with GST Council, and only then we can claim for this 1800 as ITC. So person should be registered person to take ITC. Goods or services are used intended to be used in the course of business or furtherance of the business. The goods purchased on which we are planning to have ITC, those goods should be used for the business purpose only, not for the personal purpose. The amount shouldn't have credited to electronic ledger of such person, and the amount should be credited to the electronic ledger of such person. Means goods which we have purchased, the amount should be paid to the supplier. It is important to note that you can avail the input credit only if the supplier has deposited the tax which has been collected from you during the transaction that took place between you two. It means, suppose we have purchased the goods. This is our purchases, and we paid 1800 as a tax. But if our supplier has paid this 1800 to the government, then only we can get ITC of 1800. If the this our supplier has not submitted or is not uploaded GST return, GST filing is not done by our supplier, then this 1800 we will not claim for ITC. So it is important to note that you can avail the input tax credit only if the supplier has deposited the tax which has been collected from you, that is us, during the transaction that took place between we two. So it is very important. Then e-invoicing. The next part is e-invoicing. E-invoicing is electronic invoicing, which has approved by GST Council. It was applicable, it was started from 1st of October 2020. The e-invoice, that is online invoicing or electronic invoicing system, is for GST registered person. Those persons are registered with GST, those businesses are registered with GST Council. Those can avail the facility of e-invoices. It is for uploading all the B2B, business to business invoices to the invoice registration portal, IRP. All the bills of registered taxpayer can be uploaded to IRP, that is invoice registration portal, through e-invoicing. The IRP generates and returns a unique invoice reference number, that is IRN, digitally signed invoices and QR code to the user. So all the procedure is online. Invoicing invoice gets generated online with unique invoice reference number. They get signed digitally and QR code is provided to the person or the registered supplier. TallyPrime also facilitates e-invoicing. So if we are entering the invoices in Tally, we are entering the transaction, we can convert it into a e-invoicing. We can go for e-invoicing also in TallyPrime. Also, along with the regular sales invoice, TallyPrime also facilitates online e-invoicing for regular sales invoices, POS, point of sale, which is used at different malls. Debit note, credit note, these are used for purchase return, sales return. So all these facilities are available with TallyPrime. We can go for online e-invoicing with Tally. So all these are the basic concepts related to GST. Go through all these concepts. This concept will help you to understand the GST, how it works, how ITC is claimed, who can claim ITC. All these things can be understood only with this theory part. So here we complete with the theory part. From the next session, we will start entering GST invoices. We will enter GST invoices. We will go for purchase. We will go for sales entry, and then we will go for GST reports, where we check GSTR1, GSTR2, and GSTR3B. All these reports we will check. Along with this, we will adjust all the, we can say, GST payable entries through reports part. So all these things are there in Tally Prime. We will learn it one by one. Just go through all the parts of GST. So for the time being, I will stop over here, go through the whole session, go through the PPT, and also try to solve the questionnaires. Thank you.